today's video. Thanks so much for joining me. As always, we're getting into 3 stocks I'm buying September 2021 edition, where we're going to go through these 3 different stocks and talk about why I'm interested in buying these stocks during the month of September. And we're also going to address one stock that is not on this list. I'll do that at the end of the video because I know there's one stock that's not going to be mentioned. I'm sure I'll get a lot of questions. Hey, why is this certain stock not mentioned? I'll address that at the end of the video, okay? Now, one of these stocks is a brand new stock. I don't even know if I've ever talked about this particular stock in the history of the YouTube channels, okay? Another one of them I might have mentioned once or twice ever on the YouTube channels. One of these stocks mentioned here today, I won't say which one, but you guys will definitely know this stock. So hope you guys enjoy this video. As always, I love doing these videos each and every month for you guys. All I ask in return is that you smash that like button. And that is literally it. Also, just so you know, we launched a brand new course. If you want to check that out, it is the pinned comment down there, how to invest like a pro within 24 hours. I think a lot of you guys will love that. You'll get a ton of value out of that. So once again, if you want to check that out, check out the pinned comment down there and apply for that course, okay? All right, guys, so let's get into this. The first stock of these 3 stocks up here, we'll do it in this order, okay? This one's pretty exciting. This one, in terms of its market cap, is about a $900 million market cap as of today. The stock is a $10 stock. And there's one common theme you'll see in all these stocks. The market caps are all smaller, okay? 900 mil, 2.7 bill, 2.1 bill. Why is that? That's where I see the opportunities in the market. That's where I've seen the opportunities in the market the last several months. Small caps are companies that are very, very close to being small cap companies. That's just where the opportunities are, and I'm gonna take what the stock market gives me. If you know, large cap stocks were a great deal, I'd be buying those. Right now, it's a lot of the smaller companies that have just been beating down dogs, and this is one of them. Look at the 52-week range in this stock is anywhere from $9, which it hit recently, to $24 a share. Now, this stock has been devastated. There's no question about that. They went public this year in 2021, and I mean, it started out great. Stock just was skyrocketing and it hit $24 or right around $24, and ever since then, it has just been pretty much like down and out for this stock, including all the way recently where it hit $9 a share. And I've looked at the stock and I'm like, I've done my research work, I've done my DD in the stock, right? My due diligence, and everything I've seen, this stock is pretty darn exciting, okay? Now, like I said, they went public in the past year. Sometimes when you get new public companies, they are trying to find their long-term shareholder base, right? When you go public, you got to find the institutions that are going to buy your stock, the individual investors, people that are going to love this stock for years to come in the future. And when you're brand new to the public markets, everybody's got to find out about you, right? And so that's the tough position this company's in, is trying to find that loyal investor base that's going to be with this company for years to go in the future. It even happened to big stocks. It happened to Facebook. I remember Facebook went public at $38 a share. Next thing you know, that stock was down 50% or over 50%, literally 4 months later, even with a big, huge company like when Facebook went public, all right? Now, in terms of expected revenues for this company, expect to have double-digit revenue growth year over year. So, when I look at this business, I think they can grow revenues for as long as I can see, at least this entire decade. Like, if this company ever doesn't grow in future years, I would be super disappointed. Let's just put it that way, because there's really no reason. I think they have double-digit growth ahead for many, many years to go in the future, okay? I think this company's actually going to eke out a profit next year in 2022. Analysts expect them to take a small loss. I think they're actually going to make a small profit in 22 based upon the study I've done in this company, where I see margins going, the type of stores I see them getting in there, type of products I see them getting in, how they've been building out this brand. I think analyst expectations are too low. Expecting a loss there, I expect them actually to make a small profit, which is huge for the business model and huge for the stock price. Because once you flip from taking losses to being profitable, so many more investors start taking that company serious to actually potentially invest in, okay? Which, you know, I've seen it be time and time again, when all of a sudden a company goes from that taking losses to flipping to even a smallest profit. A lot of times I've seen their stocks go up 50%, 100%, or several 100%, like in a snap of fingers. People are like, what happened? It's because a lot of folks won't even consider a company if they're losing money. As soon as it starts making money, and all of a sudden they're like, oh, that EPS is about to ramp over the next 3-5 years in a massive way, that excites a lot of folks out there. In terms of this company, the TAM opportunity means the total addressable market is so massive for this company. I mean, you know, we're talking about some of these product categories are, you know, multi-billion dollar opportunities in front of it. And that's just in one product category. And this company's in a ton of different product categories. So the TAM is literally almost unlimited for this company. company is absolutely insane, especially for a small company like this one, all right? Price to sales ratio is under 3 for this company, meaning what is their market cap versus what their revenue is, okay? It's under 3 for this company. Why is that important? Well, their competitors in this market usually trade at a 4 to 6 price to sales ratio. And keep in mind, most of their competitors have far less growth expected than this particular company. So that makes it really intriguing because I'm getting it for a much cheaper price to sales ratio valuation, which is what I want to compare because they're not profitable yet. So I really need to compare on that price to sales ratio. It's significantly under their peers. And this company, in my opinion, without question, is going to grow massively bigger in terms of percentages than any of the competitors out there. So that's really intriguing because usually you would expect to pay a more advanced price to sales ratio for a company that has a lot more growth going forward in future years, okay? They have a growing brand that resonates phenomenal with millennials and the next generation as well. All their marketing, the way they brand their products is all aimed at the future generations and not necessarily the baby boomers, which I think is extremely important for the product categories they compete in at the end of the day. And they have a huge celebrity background. You ever heard of Jessica Alba? Yeah, Jessica Alba. She is one of the bigger shareholders of this company and actually the co-founder of this company. The company's name is Honest Company. HNST, Honest Company. They basically have products like diapers, baby wipes, all those sorts of things like soaps, sanitizers, even cleaning products are getting into now, a lot of different markets like that. And so when I look at this company, I look at a company that is on the verge of becoming a multi-billion-dollar company over the coming years. All they have to do is execute. I looked at their branding, their products, their reviews. I've looked at, everything is setting up for this company to become a multi-billion-dollar company in my mind without question. Is this company going to become Procter & Gamble tomorrow and have a several $100 billion market cap on it? No, okay, absolutely not. But that's not the name of the game when you're a $900 million market cap. This stock, for it to be a huge success for me, all they have to grow into is like a $3 billion, $5 billion company. And I have no question in my mind that they can do that over the next 5 years. I think there's potential that they could even get into that $5 to $10 billion range as far as their market cap goes over the next 5 years, okay? And so I think this one has huge upside potential, and I'm excited just to see them grow and grow and grow in future years. It's a new stock I just started adding. The stock has already started going up. I'm hoping it stops going up, and I'm hoping it actually goes down for a little bit so I can add a bigger position there. I would love to make this into a multi-6-figure position. We'll see if it happens, but yeah, I love the Honest Company, okay? That's the first stock up here. Let's get in this second stock of these 3 stocks, and then I'll address the one that's not on the list. Alrighty, folks, in terms of the second stock up here, this is a $2.7 billion market capitalization. Now, this is a stock I've been buying heavily the past several months. I mean heavily, I'm talking hundreds and hundreds and hundreds of thousands of dollars I've been putting in this stock, and I plan to continue to buy this stock throughout the month of September. It's about a $28 stock price right now, $27, $28 as of today, okay? The stock's had a crazy 52-week range, everywhere from about 15 bucks a share to $51 a share. So yeah, it's been a nuts kind of past year for this company. Now, they did go public in 2020, so this is another one of those companies that has not been public for a long time. They're trying to find their long-term investor base there. There's a huge private equity company that has a massive stake still in this company. They've been trying to sell out of that. The company made really good money on that. They're trying to divest some of their shares. So it's kind of put some extra selling pressure out there in the markets, in my opinion, plus a kind of a cloud over the stock price. When that goes away, I don't know. It could go away in a month. It could go away a year. It could go away in 6 months. We'll see when that kind of cloud over it, that's kind of overhanging on the stock price goes away. But when it does, I think it's going to be a massive upside for this particular stock, okay? As far as the underlying business, the revenues are expected to be up around 20% this year, okay? Now, only expect to have 5% revenue growth next year, okay? There's 2 ways you can look at that. One is, wow, that's a massive shrink in revenue. The second way you can look at that is there's huge potential upside beats that could be potentially coming for this particular company in 2022, okay? At the company's valuation, even if they were only to grow 5% next year, I still love this stock. I extra love it because I think about the upside potential the stock could have, and I think about how undervalued the stock is right now, and that's what really, really intrigues me, not just on a long-term basis, thinking about this company over the next 5 years, but thinking about this company over the next 24 months, things like that, okay? EPS, as far as earnings per share, think about that as profitability, is expected to go up in 2021 and 2022. So basically, this company's expected to have their revenues continue to increase, expected to have their profitability to continue to increase. That's what you definitely want to see in a company, right? Trailing P of 17 on the stock, Forward P is 16 on the stock. The valuation is dirt cheap, especially when you look at the growth rates of this company. I mean, look at the growth they had last year. Look at the growth they have this year, 20%. We'll see what happens next year. Maybe they only grow 5%. Maybe they grow 10%. Maybe they grow 3%. Regardless, the trailing P and forward P, in my opinion, is far too low on this stock at this given time. In terms of even a cheaper metric, look at the price to sales ratio. Price to sales ratio on this stock is like a 1.2, 1.3 right now. Okay, price to sales ratio on that, extremely low. They have a competitor. They have kind of two other main competitors in the market. Not to say those are the only two companies that are competing, but they have two main competitors. One competitor is kind of already public, but they're public in a different exchange. So basically, this other company is thinking about doing a secondary offering in the United States. Now, this could be interesting because I think it could potentially drive a lot more attention to the overall space that this company competes in terms of the stock price, and people looking at the competitor and being like, is that the best option for us? Or there's two other companies that are competing out there with this company, so maybe it's one of those companies, okay? This company has great products. You look at the reviews on Amazon or anywhere out there, like phenomenal reviews, very loyal customer base that has a lot of positive things to say about the company. They have an expanding TAM that just continues to get bigger in the markets they compete. Their total addressable market just gets bigger and bigger and bigger, basically year after year after year. And they're one of three big companies in the spaces they compete, okay? This company, a lot of you guys that are loyal watchers of this channel, you might know it's Corsair Gaming, CRSR. Corsair Gaming is huge in the gaming space when it comes to hardware products, keyboards, mouses, anything like that, right? Even like the whole PC itself, right? And then absolutely massive with the Elgato brand when it comes to the streaming side of their business. And guess what? Year after year after year, pretty much, the gaming sector gets bigger, the TAM gets bigger around the world, right? And then the streaming, streaming in general just continues to get bigger and bigger and bigger year after year. And if you think about gaming and streaming, it's like, are these segments going to shrink or grow over the next 5-10 years? If I put my money on it, I would say definitely grow and grow in a massive way when it comes to gaming and streaming. And so a company like Corsair is going to obviously benefit from this. And that's why I've been buying the stock so dang heavily the past few months. If this stock continues to be under $30 a share, I will continue to buy shares of this stock. Also, in the month of September, the new 2024 call options should come out. And in the month of September, they come out about the middle of the month. I'm going to look at Corsair call options very, very heavily. What strike prices you might add? I'll be looking at $20 strikes. I'll be looking at $25 strikes. I'll be looking at $30 strikes. I'll be looking at out of the money strikes at like $35 and $40 as well. I'll be observing all those, seeing what type of premium I'll need to pay on those. Because like I said, I'm a believer in this company over the next 5 years, long term, right? But I also think this stock is set up in a position where it could absolutely be a beast the next 24 months. So coming from that context, I want to have most of my money in the long term, right? Owning shares of the stock straight up. But I really honestly want to play some call options this one because I think it has so much upside over the next 24 months or so. I could be wrong on that, which is why I want to put most of my money, right, in shares of stock rather than call options. But I'm going to look at both. Corsair Gaming, stock that I'm a huge believer in, and I think the downside risk for the stock is extremely low. Do I think the stock's going to be lower in 3 years from now than it is today? I think that's an extremely low possibility. I would put it at a 2% or less possibility. Do I think the stock could be double or more than double the stock price in 3 years from now? I would put that at probably about an 85% probability right now, in my personal opinion, based upon the study I've done over this company throughout the year. So yeah, Corsair Gaming, super excited about that one, okay? And obviously a lot of you guys know that one. The third stock of these three stocks up here, and then we'll address the elephant in the room, the stock that's not on this list, okay? The third stock up here, $2.1 billion market cap for this one. It's a $5.50 stock here today. The 52-week range on this one's really crazy. $4.63 was the low it hit. It hit that low about a week or two ago. It went all the way up to $16 at the 52-week high for this stock. They went public in 2019. You'll see a common trend with all these stocks. Went public 2021, 2020, 2019. When you're in the early days, and this is why I hate buying IPOs, man, it's tough to find some of those investor bases. And if you have a couple numbers that aren't quite hitting, whew, your stock can get absolutely devastated, okay? I understand maybe somebody trying to play an IPO from a perspective of a short-term trade or something like that. It's just not my cup of tea. And as a long-term investor, there's way too much so you have to kind of find out. I like to get in these stocks after they've already been beaten down dogs, and then I can look at it and I can kind of view their quarterly numbers, view their conference calls. They have a public record now, and I can say, okay, this looks really darn intriguing, especially when I'm looking at it on a valuation basis, okay? This company is expected to have revenues go up 15% in 2021. They're expected to have revenues go up 20% in 2022. Now, this is a huge deal. If you can ever see a company that is expected to have a revenue acceleration in the next year, that is a massive deal, guys. A massive, massive deal if you can ever see revenue acceleration in a company. This is something growth investors love to see, because most of the time, let's be honest, revenue percentage should get lower and lower and lower and lower. That's how it works in corporations, right? When you can talk about revenue acceleration, that means something exciting is going on with your business model, right? That all of a sudden you're going to have better revenues next year than you actually had this past year, right? The company is expected to have basically a net loss in 2022, which I don't like, okay? I like companies that are expected to, you know, make money, right? Or expected to be like right dang there, where it's going to be close if they take a small loss or a small, profit. This company is expected to lose money, and that's why I can't make this third stock a huge investment of mine. I have no problem with these two stocks making them huge investments. This one I can only make into a minor investment because of basically the fact that this company is expected to lose money even next year. They'll definitely, it looks like lose money this year, but even next year expect to have a net loss as well, okay? Now, the Rona hurt this business in a massive way. There's no doubt about that. It hurt this business in a very bad way. The international opportunity for this company is crazy, okay? The international opportunity for this company is actually much bigger than their US opportunity. And so that's something to keep in mind there. Not many competitors in the space this company competes in, honestly. Not many competitors at all. There's one major competitor, and outside of that, there's maybe one minor competitor, I would call him, and everything else is like not even like on the radar, essentially, okay? This company should grow revenues by 10% plus year over year for basically this whole decade we're in right now. For, you know, all the way till 2030, I expect this company to grow revenues 10% plus year after year after year after year. And what is the stock, you might ask? It's SDC, Smile Direct Club. This stock has been absolutely hammered. If we think about, you know, what has transpired for this company over the past 18 plus months. The company was just starting to do some real big international expansion right when Rona hit, which obviously, you know, hurt them in a massive way, because all of a sudden you had no one having to go to work, right, or go to school or any of those things. Everybody's all of a sudden covering up with masks, so that insecurity around teeth, right, which their business, if you don't know, is essentially straightening of teeth. And they can't really fix, let's call it really messed up smiles. You still need traditional braces for that. But in terms of more minor type stuff, what their product does, that works really well in that market. That, let's call it, light to moderate, somewhere around there as far as fixing that. But let's be honest, man. I mean, how many folks have been wanting to go spend, several $1,000s to fix their smile over the past, couple of years? Now, all of a sudden, when masks start going away in a big way, right, and people start interacting again, which is already playing out, right, and will in a massive way, those insecurities around smiles definitely come back. A company like Smile Direct Club benefits huge from that because they basically undercut the competition in a massive way. We're talking Smile Direct Club's products like, under $2K, when the competitors in this market are, a $5K, $6K, somewhere around there, right? And so think about it like this, right? If you have, let's say you want to get your teeth straightened more than they are, and you want to get your smile near perfect, unless you have teeth that are in a really bad place, you can use Smile Direct Club's product. You can benefit from that for actually a much cheaper rate than using braces or something like that. And a lot of people, they just don't want to use braces, especially traditional braces. And a lot of adults, things like that, would rather just use Smile Direct Club's product. So huge benefit coming for this company over the course of this decade. And also the company's trying to expand into more products, even teeth whitening products, things like that. Maybe even getting on some subscription products, things like that, expanding into some retail. So I'm looking at Smile Smile Direct Club and I see big potential there, but I can't go big into the stock because it has its risks, especially around profitability and the losses this company's taken, okay? So big op, can't invest big into it, have to make it a minor investment, okay? Now, obviously, let's talk about the elephant in the room. Tattooed Chef was not one of the stocks mentioned here, okay? Why is the Chef not mentioned? It's because I don't like the stock anymore. No, I'm just kidding, okay? Obviously, I love the Chef, believe huge in that company over the long term, right? But when I look at it here, the Chef is a 7-figure position for me now. I built that out into a very, very large position. The Chef probably is my number 1 or number 2 biggest investments, right? So at this point in time, I have to start watching diversification, right? And so when I look at this, I see these 3 stocks as having huge potential as well. It's not like Tattooed Chef is the only stock that has huge potential in the stock market. So when I think about from diversification reasons, what if I'm wrong in relation to the Chef? These are things you got to always calculate. Also, the Chef has already made a pretty nice upward move, right? It was at $16 like a week ago. Now all of a sudden it's at $20, $21. When I think about it from that context and with how much money I've poured into that stock over the last several months, and now I'm up on that position, 6 figures plus, it makes sense for me just to hold now. Now, let me be clear, if the Chef all of a sudden falls for any major reason in the month of September, I will be buying the Chef. Like, let's say it falls back to $16, $17 where it was about a week ago, a week and a half ago, I'll be buying more Chef. But for now, I'm comfortable with my position sizing. If the beast continues to go up, then I'll just gladly continue to hold that stock. But as far as buying, I got to focus on some other stocks and building out some other positions bigger and diversifying a bit. So hope you guys enjoyed this video. As always, all I ask in return is that you smash that like button. That's literally it, guys. If you want to check out that brand new course on how to invest like a pro in 24 hours or less, check out the pinned comment down there. I repeat, the pinned comment down there. Thank you for watching and have a great day.